Gold has been bullish over the past few days, so let's find out why gold has been bullish. At this moment, we're a few hours past the COMEX openings, so it's sort of like evening here in Europe, but it's the day in the United States, and gold is continuing its bullish trend upwards, right? Recovery from the 1700 lows. And I think there are a few reasons for this. And I've been telling people, look, there's an underlying disparity between the US stock market and the overall economy. And at this moment, we have some preliminary numbers, at least from retail and consumption, especially over Black Friday. And one of the things I want to show you is to talk about, how were sales affected by the pandemic? And overall, numbers have dropped. I mean, first of all, the average amount of shoppers has decreased from 86 million from 190 million. But more shockingly, people have been spending less. Well, it's not really a surprise. I mean, currently, people aren't in the mood to spend and buy frivolous things because, they want to be more cautious with their budgets. People are losing jobs. People might be potentially be laid off in the upcoming weeks. Winter is here and it's really, really cold. They've got more bills. You have more heating bills. You have much higher utility bills, and it's pretty terrible. So most likely people won't spend as much. And I recently came across one of these surveys that was tracking the spending habits of people during COVID. And what they found was, people are cutting back. Overall, 63% of people are cutting back. This is across all generations. Gen Z 67, Millennial 63, Gen X 62, Baby Boomer 64, males, females. But it's all within the same range. Yes, Gen Z are cutting back more, but the difference between 63 and 67, it's minuscule. It's like, it's not so different. Everybody is cutting back almost the same amount. But what's more worrying is not so much that people's salaries are being reduced. See, they've tracked also the top reasons. And one of the more long-term reasons that's going to affect us, even if there is sort of recovery, people get vaccinated, the pandemic is over, it's the caution. This pandemic has retrained how people think, and people are becoming more cautious. And you're like, yeah, but being more cautious is good, but being more cautious does not help economic recovery. See, in order for the US economy, right, how it's structured to recover, people have to want to spend and go into debt. People being more cautious doesn't lead them to spend and go into debt. The only way you can bring out people to spend more and be less cautious and to take on debt is that when they have confidence. They have confidence that there is a security net to back them up and to shore them up when they spend. Now, do I think that there will be that security net? Well, the security net that's being discussed, I think everybody knows what it is. It's stimulus and what they call stimulus checks in the United States. I don't see that coming. I don't see stimulus checks coming anytime soon. I don't think they're going to issue stimulus checks anytime quickly, even if Democrats take the Senate, they're not going to come out with stimulus checks the next day. They're going to discuss this, and then potentially you might see stimulus checks by March next year. And by then, you would have completely destroyed consumer confidence. And they'll realize in, fall 2021 that they need way more stimulus because everybody waited on it and sat on their behinds for this whole time. and and basically it's almost too late. So what will happen to the price of gold? Well, we're seeing this right now. The price of gold since 1776. When it was going down, I told people gold is going on sale for Black Friday, 1800s, 1805, 1700s, 1790, underneath 1800. It's a sale. Buy gold. I bought gold sovereigns. I bought 4 gold sovereigns during this period. It's a great buy. There's no reason to not buy it. I think I bought at 1830. I bought at 1800. I bought 2. It went down even lower. I bought at 1790. I bought 1 more. It's clear this was a point of resistance in most of the programs I was trying to work on to calculate, to do gold forecasts. It wasn't that I was doing technical analysis, it was that I was trying to teach a computer to do technical analysis. It believed that at this point, gold was oversold considering every single asset out there. Even at $1,800, gold is cheap when you compare it to the Dow Jones, the S&P 500. Any stock compared to gold is cheap. Bonds, gold is cheap compared to bonds. Bonds are super expensive right now. The only bond currently that gives good yields and is still relatively safe, no matter how you look at it, is the Chinese, I believe they're called the Chinese government bonds. They don't have treasury notes, they've got government bonds. And there's not a lot of them. They are selling at a premium. I believe I looked at the numbers recently. There was a recent sale and they were selling at a premium. Usually the yield on those are 3%. They are, and if you look at the overall dollar weakness that we're currently going through and the strength of the Chinese yuan relative to the dollar and the fact that it's been gaining on the dollar and it gives a 3% yield, it's a very attractive option. Basically there's only very few assets out there that is, I would say that's a safe compared to gold, and that's relatively cheap. Now, I've been telling people I bought about platinum because platinum under $1,000 it's ridiculously cheap. It's got a lot of industrial uses. It has, it's used in something. I was doing some research. It's called a three-way catalytic converter that has platinum, palladium, and rhodium, and it's used in compressed natural gas engines and hydrogen, and they have certain uses for these type of catalysts also in hydrogen fuel cells, and that's possibly the future of trucking, that type of energy use. So platinum, palladium, palladium, I'm still a bit on the fence about the price of palladium. It's a little bit expensive at above 2,000, but if at any time palladium drops below $2,000, I'll have to take a serious look at palladium and maybe consider it as a buy. Rhodium, I can't find rhodium. I'm trying to buy physical platinum. I can tell you this, trying to buy physical platinum at this moment is hard. It's really hard. The dealers that I met before I bought some platinum, I think I bought 1 ounce of platinum. I showed people I bought the Lunar Bull at $1,000 roughly when it was back at 800. No, when it was back at 850, I paid the premium. I bought the coin. It was still cheap compared to now. I mean, it was when platinum was already at 800 and something. I paid, I think, 990, close to 1,000 Swiss francs. Obviously, it's still a little bit more. I'm seeing that platinum by the end of the year, it's going to be already in the green for what I bought. And platinum, it definitely is cheap at it's a little bit, it's still $1,025 above my buy limit. So I might add a bit of platinum at the end of the year. But if you look at all the commodities, all the metals, silver, platinum, gold, they're all cheap relative to the stock market, the Dow Jones, and to all the financial markets. And when I look at my gold predictor, where I've been making a new one that's slightly more accurate, it does predict that based upon the current market situation, right? And based on current market prices, it expects that we should see somewhere around the 2,000 plus range for the price of gold. Do I think that it's accurate? Well, even if it's inaccurate and it misses its target, right? I think the safety range for this prediction is roughly plus or minus $100. So we should at least by the end of the year see 1900 plus gold, according to the predictor. And most likely we'll see 2000 plus gold. So this is March next year. So March next year, roughly end of this year, January, March, February, somewhere around that time period, sooner or later we should see $2,000 gold, but we should at least see during that period 1900 gold. What if that doesn't happen? What if we don't see 1900 gold? Well, the way I see it is that, you know, it's a good time to buy because honestly, like the way the stock market is valued at, it makes no sense to go into stocks right now. Even if the stock market loses 50% of its value, like tomorrow, then it will probably be relatively equally valued to gold. That's how I'm currently valuing it. It would have to lose over 50% of its value for gold to be considered as more expensive. But what might happen at that point is you might have a complete dollar collapse at the same time as the stock market collapse. That's the worst situation you can have. And yeah, you could have dollar flight and stock market collapse. That would be terrible. That would be really terrible. That would lead to a long-term recession. Potentially right now, most analysts are seeing like a stock market rise, but it's not so believable considering the economic situation. If you look at, I think that most stock market analysts at the moment, they say they're cautiously optimistic because, well, the underlying part is that the stock market, you know, is completely disconnected from the actual economy. And most analysts know this. They just don't know why the stock market is still rising. And, you know, there are some theories that there's, because of QE and everything, people believe that, you know, the stock market can continue to rise. But if you have companies that make no income, at what point will foreign investors, not a US investor, decide that it's not worth it to hold dollar-denominated assets such as stocks that have low growth because there's no potential economic drivers and consumption? Why would they hold US assets when they can put it into other country assets that do have growth? That's the main part that might collapse the Dow and the S&P 500. It's not so much the current price it is at in US dollars. You have to look at its price in other currencies. And I really recommend that you do that. If you look at its price in other currencies and you look at it right now, it's not super attractive. It's like a high risk move to buy into US stocks. If you look at it, for example, if you look at it, you're buying US stocks with Swiss francs, it's kind of scary because you're looking at, so the US dollar has declined almost 8%, 9% against the Swiss franc. And the US, and if you price in the stock market, since the crash, it really hasn't recovered. You know, it's pretty much been flat. And you're like, yeah, we're probably going to go lower, especially if the dollar price people start selling US assets to close their positions. And or they fear that there is no real economic recovery when they look at their accounts in their home currencies. That's the risk I see happening going forward. Do I think that, you know, do I think that the US currency will disappear? I do not think that the US currency will disappear. I do not think the dollar will disappear. There's a fundamental reason why I think the dollar will not disappear, and the reason is quite simple. A lot of people will tell you that the dollar is a pure fiat currency, and I'm of the opinion that the dollar is not a fiat currency. The dollar is backed by a commodity. That commodity is not gold. That commodity is the US military and the United States ability of projection. And there is one article, I'll link it, you know, it mentions that, you know, there's 1.3 million soldiers, 11 aircraft carriers, 4,000 airplanes, and over 7,000 nuclear warheads. You just have to look at what's happening in the Middle East, right? If anybody, not recently, but in the past, if you were any country in the Middle East and you went up against the United States, what happened? Well, it didn't have to just be in the Middle East. It could be North Africa. It could be in Central Asia. If you go up against the United States, they come, they bomb you, and they take over. And if you have natural resources such as oil, well, now your oil is priced in US dollars, and it's sold by American companies now. So yeah, it's backed by something. It's not backed by necessarily by gold. It's backed by force. It's backed by direct force and the capacity to intervene globally with direct force. Now, this might not be the most popular view, but it is. If you think about why people use a dollar, why all these countries choose to use a paper currency, this is the most plausible reason, you know? Of course, there's other reasons too. There is this part. I like to see it as, three pillars. There is one pillar is the direct force of the United States. That is that the United States has military projection powers that is unrivaled by any other country out there. The second part is that due to this unrivaled military power, most commodities are priced in dollars. This includes oil, gold, silver, copper, nickel, whatever you want. All of these commodity assets, are priced in dollars. And the third and last pillar is that because everything's priced in dollars, people look at the US and why do they decide that it's okay for them to use dollars? Because if you just have like force, right, and you price everything in dollars, people can still choose to not use your dollars. They have to want to use your dollars. And the reason why they want to use your dollars is the US is the largest consumption market in the world. So it means that, they can trade with the US, they can have dollars, they can buy stuff, they can sell stuff to the United States. And as long as there's strong consumer confidence, people will elect to use the dollars because there's an incentive to use it, right? However, what happens if, let's start with the last pillar, that the pillar of consumer confidence drops? Well, in that case, people might elect to not use the dollar despite the United States having this military projection force. Now, there will still be countries that will use the dollar. There will still be a lot of countries, but there will be less, see? Because, this is a lot. 1.3 million soldiers, 11 aircraft carriers, and 4,000 airplanes. But you cannot force people in the long term to use dollars by pure military force. It has to be a combination of hard and soft factors. Now, do I think that gold will increase in value because of lower consumer confidence in the US and also because of quantitative easing? I think so, yeah. I think it's not a surprise that gold will increase in value. Now, do I think that silver will increase in value? Well, it's a bit of a debate. I think that since 2008, silver had a bit of a run, but then it became dissociated from the price of gold. So the platinum, all these other metals became dissociated with the value of gold. And one of the reasons for that is because gold is a reserve currency while all of these other metals are not. And that kind of gives gold some specific characteristics, right? Being a reserve currency, gold is not, I would say, the absolute reserve currency. The absolute reserve currency is still the dollar, but it is a tier 1 asset and it is a reserve currency. And being a reserve currency, it means that countries can settle accounts with gold. Countries cannot settle accounts with silver, platinum, or any of these other monetary metals, even though individual banks can use these as intermediaries to trade for gold, right? You can buy silver and play the silver-gold ratio and trade for gold when it's profitable to do it with silver. You can do the same with platinum. You can do the same with palladium. You can do the same with rhodium. But these other metals have industrial uses. And industrial uses, I've said in previous videos, if you rely on a metal being inflationary because of industrial uses, sooner or later a replacement will come. Industries will invent a replacement. For silver used in photovoltaic cells, This will be some sort of aluminum oxide or carbon layered with electrons on top. You know, they're looking into it because silver is getting expensive. For platinum, there are nickel oxide based catalysts that are maybe like 60% as good as platinum, but you know, they're much cheaper. So be aware of that. Be aware that you cannot expect industrial use will drive the price of a metal or primary resource forever up. It will come down at a certain point. It's the same with aluminum. You know, aluminum at one point in history was so expensive. It was more expensive than gold, aluminum. But people, but nowadays, you know, because it has a strong industrial use, people decided to find ways, cheaper ways to make aluminum cheaper. It's because of its industrial use, you know, it had deflationary forces. Now, to conclude, what I want to say is I think gold will go higher. I think that, you know, personally, by the end of the month, when I get my next paycheck, I think before Christmas, I will buy a little bit more of gold. I most likely will add 1 or 2 sovereigns. I think gold below 1900 is in a buy zone for long-term investing, for stacking. I think silver under $25 is good for long-term stacking. It's still good at $22 was good. I think in the beginning of the year, I said, you know, silver will be within the range of above $20, below $30, and gold will be around, you know, under like the 1900s, but above the 1800s, and it will be sort of a band around there. Now, that's not exactly super precise because it's quite a wide range, but I think that, you know, gold would move somewhat sideways until the end of the year, and at the end of the year, we'll most likely see a reversion or inversion upwards for gold. Do I think right now is a good time to buy gold and to back up the truck? I say to every single one of my viewers, there's no need to back up the truck. You know, just do it at your own pace. Nobody's in a hurry. You're not going to be in a hurry. You don't need to stretch yourself too much because ultimately, I don't know which way it will go. I only put what I can lose into gold and silver in my stack. Now, I don't ever expect that gold will go to zero. I do expect gold holds its value very well, considering current situation relative to all our fiat currencies. However, you never know that from tomorrow, you know, the situation with gold is that its value is so high because central banks accept gold. Now, if a computing asset such as silver becomes a tier 1 asset or platinum becomes a tier 1 asset, gold might come down a little bit, and one of those other assets might just explode because, yeah. And I do see a lot of potential for silver. Now, I'm not going to drag on too much about what I think is going to happen to silver, but I think that silver has a strong potential to become more, I would say, correlated with gold. We saw that, you know, over the last, I would say before 2018, silver and gold became almost disassociated, right? Gold was in this sort of bullish pattern. Silver was kind of flat. It was cheap. But now it's sort of reverting back to the same historical mean. And I think going on forwards, that's most likely to happen. That gold was recently, like 2019, added as a tier 1 asset. Silver will most likely trail as a tier 2 asset for a while. And then maybe sometime in the future, it might also get added as a tier 1 asset. Because, you know, yes, both silver and gold are good conductors, but silver is just so much cheaper. And gold, central banks might not want to hold such an expensive asset on their balance sheet. You have to realize that gold is expensive compared to compared to the stock market, it's not expensive. But compared to the other metals that can do almost the same thing, it is getting quite expensive, right? And the reason why it is getting expensive is because it's a tier 1 asset. Now, if the other other assets join the tier 1 asset group, I suspect that they will explode upwards. But who knows? Who knows if they'll ever add commodities, metal, like precious metal commodities into the asset groups. Now, we never know. Maybe in the future they will. Anyways, to conclude, I think we're in, like I said in my last video, potentially a long super cycle for gold and silver. I'm relatively confident about, next year, somewhere around March, we'll see peaks of 2,000 gold. When I look at the data and when I look at the probability of that happening, just to point it out, right now, the system I'm building, when it's looking at the price, it believes that there's a 75% chance that we're going to break out of $2,000. There are people that say like, no, it's unlikely. I think that currently the uncertainty surrounding the US economy is so great that, and the fact that gold is so cheap. And I want to also look at like other safeguards, like options against against the S&P 500 and the Dow and all these, shorting options against the stock market are so cheap. If you look at the 3x bear market direction, I think it's like $4 on to for that index, which is the shorting index of the S&P 500. And you look at it and you're like, wow, insurance against 3x, like basically for each down point you gain $3 is $4. For the S&P 500, it's completely insane. It's just insane. The S&P 500 needs to go down like 5% for you to make a huge gain on that trade. I think it's it's ridiculous. Insurance is so cheap right now against the stock market and against the overall economy that there's no reason to not buy it. It really, like, it's kind of the only asset you should be buying, insurance against the downturn at this point. And it's probably one of the better assets to buy. And also when I look at sort of the employment cycles, the macroeconomic employment cycles, we are at like a pattern that goes every single, I think 8 to 10 years, we go through this pattern. We go through a major recession. The employment, first of all, we have a large unemployment, and then we go down to super low unemployment. So very high levels of employment before the next crash and recession. And it's happened, before the dot-com bubble. It's happened before the 1987 crash. It happened before 2008. And we were on track for that at the end of 2019, right? And when I look at the unemployment figures, it's kind of masked by the coronavirus, but the trend is still there. It's not disappeared. It's not like all of a sudden all the issues that should have happened, the crash, the restructuring, the long-term recession, the rise for the price of gold, all of those things are in place, and they haven't gone away. So yeah, I think we're in for a strong run for gold, and we'll see what happens. Anyways, thank you for watching. Click the like button, click the subscribe button, and I really wish you have a great day. Thank you for watching. Dave out.